Hi guys, Brand Asset Management here, and today I'm doing a stock review of Advanced Micro Devices, also known as AMD, ticker symbol AMD, using my 7 simple steps. But first, let's go over the stock price for the last year. 1 year ago, the stock was at $48 a share, hit a 52-week low in the pandemic of $36 a share, and has rebounded very strongly, eventually hitting a 52-week high of $99 a share, but has been trading relatively flat with some pretty big fluctuations, and today is even down 4% with it currently at $85 a share. The market cap of AMD is $107.7 billion, and let's get on to my 7 steps. The first is the P ratio less than the market, and the current market is 21 and AMD is 43.9, so that is a fail there. Second step is the P ratio less than the sector, and the sector it is in is technology, and that has a P ratio of 41, so that fails again, and it is greater than the sector. Now step 3 is the revenue increasing over the last 5 years, and the revenue has gone from 4.27 billion to 9.76 billion, so there's a check mark there, the revenue has increased. Step 4 is the profit increasing, and has gone from minus 487 million to 2.48 billion, so there's a check mark again, the profit has increased. Step 5 are the shares outstanding decreasing or flat, and the shares have gone from 935 million to 1.2 billion, so there's a fail there as they've increased more shares. Just want to say thank you for watching. Please leave a like if you've enjoyed the video, give a comment on your thoughts on AMD and if you think it's a buy, and consider subscribing if you enjoy investing in stock analysis videos. Step 6 are the current assets greater than current liabilities, and the current assets of AMD are 6.14 billion and the current liabilities are 2.42 billion, so as a check as they can pay off all their current liabilities with their current assets. Also looking at their total liabilities, this is actually 3.12 billion, so they can pay off all of their debt completely, so I'm giving them an extra check mark for that. This is quite rare, doesn't often happen, so good news on AMD. Now looking at the last step is the free cash flow increasing. To get the free cash flow, we take cash from operating activities minus capital expenditures. So 5 years ago the free cash flow was 13 million, and now it is 776 million, so there's a check mark there, the free cash flow has increased. If we get an average of those free cash flows, we get 13 million, minus 101 million, minus 129 million, 276 million, and 776 million, which gives us an average of 167 million. So if we get a price to average free cash flow, which is the market cap divided by this, and the market cap is 103 billion divided by 167 million, that gives us a price to average free cash flow of 620, which is an astoundingly high number and easily the largest ratio I've ever seen. So that is not good news for AMD. So I'll be looking at their more recent number, and that gives us a ratio of 133, which is the second most I've ever seen, second only to Tesla. So that is not good news for AMD in terms of price to free cash flow. AMD does not pay a dividend, so I'll not be going through that today. But if we look at the analyst ratings, we get a little bit more bullish signals here. So Refinitiv has it at a consensus buy, 23 buying, 14 holding and 2 selling, with the average target of $102 a share, which is a 20% increase, and on the high side with almost a 90% increase at $161 a share, so that's very good from Refinitiv. And a similar story with tip ranks, they have it as moderate buy, 15 buying, 6 holding, 1 selling, an average target price of $107 a share, which is a 25% upside, and a high price of $135 a share, which is a 50% increase. Simply Wall Street have it currently overvalued at 32% with a fair value of $67 a share, so Simply Wall Street think it's a bit too high as well. So just to quickly summarize the 7 steps, the P ratio was not less than the market with 43.9 to 21.5, so that was a fail. P ratio was greater than the sector with 43.9 to 40.5, fail again. Revenue had increased from 4.27 billion to 9.76 billion, so that was a pass, and the profit also increased from minus 500 million to 2.5 billion. Shares did increase from 900 million to 1.2 billion, so that was a fail. The current assets could pay off the current liabilities with 6 billion to 2.4 billion, and they could also pay off their total liabilities with 6 billion to 3 billion, so that was an extra check mark I'm giving them. And the free cash flow has increased from 13 million to 776 million. So that is 4 of the 7 steps passed, but I'm giving them an extra check mark for the current assets, so they've actually got 5 passes. So that's quite good news, but their price to free cash flow is worrying. If I go to my model here, using discounted free cash flow, I actually have AMD at a calculated stock price of $20 a share, which means it's 76% overvalued. I think this is just to do with the very high ratios of price to free cash flow. If I'm a bit more generous with some of the numbers and expect the free cash flow to increase quite dramatically in line with their more recent values rather than the previous where they were negative, even then I would only maybe get it to $50 a share. So in terms of discounted free cash flow, I don't think it's a buy. If we go to the Buffett Graham intrinsic value, the fair value that they would have it at is $131 a share and a Graham price of 98, but this is if they have an expected growth rate of 52%, which is very, very high. Is doable, yes. So if you're very bullish on AMD, you could use this as a marker. But if we go to Yahoo and look at more of a 5-year analyst, which puts it around 26, you can see that would have a fair value of $70 and a Graham price of $53 a share. So can they grow at a 50% rate over the next year, and can that persist? If so, it looks like it's a buy. If not, then I would stay away. Unfortunately, I would have to agree with these numbers. I don't think it's a buy at the current price. I did like it earlier in the year when it was at $40 a share, but I think at 85 it's just a bit too steep. I want to see more free cash flow, as that is the main way I value stocks. Just to quickly look at some of the technicals at AMD, I have a 50-day moving average in blue and a 200-day in grey. As you can see, the 50-day is over the 200-day, which it means it's an upward trend. The price has fluctuated around the 50-day, often breaking it. It does have some resistance at the 50-day, so you can see this is the first time in a while it has broke below it. Previously, when it did broke below it, it broke right back through to hit even greater highs. So these are very bullish signals. You would have to go back quite a bit to find any golden crosses or things like that. This is the 5-year chart here. You can see that the golden cross was actually in 2018, so if you bought there and hold based on that, you wouldn't have sold the entire time and made an absolute killing on the stock. If you came a little bit later and seen any of these signals at the midway of 2019, you would have bought and held the entire time. So anyone trading on technicals, this has been in a very upward trend. The 50-day moving average is in a slight downturn here, but this has gone in the past and it's continued to rise up past that. So if you're bullish on AMD, this could be a good time to buy here if you think it's going to break through again. Right guys, that's my analysis of AMD. Ticker symbol AMD, using my 7 simple steps. Give a like if you've enjoyed the video, leave your comments below if you agree or disagree, and consider subscribing if you enjoy investing and stock review videos. I'll be bringing out videos twice a week, so I want to say thank you all for watching, and I'll catch you guys next time.